When we get into the $90, $100 a barrel, it is absolutely having an impact. Moving up into $150 a barrel, that's recession.
When you look at what's happening today, how similar is this to the 1970s?
So there's many similarities, but with any sort of cycle, we're always going to get elements that are a little bit different. It's different than the 1970s. Technology is different. The way the economy moves is different. But there was one very important point, and that was...
David Quintieri has spent years breaking down financial crisis, inflation cycles, central bank policy, and market instability for millions of viewers through the Money GPS.
His work and research have been featured by Bloomberg, MarketWatch, and Business Insider, while his analysis on systemic financial risk has appeared across major independent financial media for over a decade.
Known for simplifying complex economic systems into real-world survival strategies, he's built a reputation warning about the fragility underneath modern markets long before most people see it.
AI is absolutely going to start impacting more jobs, all jobs. Does this make this particular cycle more difficult for people than it did in the past?
The cycle's moving much faster than we've ever seen before.
Okay.
So even when it was like back in the day of introducing computers into the workplace, a lot of companies were hesitant. They were saying, why do I need a computer? I have the secretary right here. She does all the data entry herself. So a recession happens, we lose jobs, the economy starts to grow, we hire back. But
Right.
What if this cycle happens and we lose jobs and then AI and automation actually
Take over.
replace those jobs? One of the most expensive things for any company is the people. The stock market, as sad as it is, they love it when a company fires people. The stocks will usually go up. The number one thing that your employer wants is...
What would be a more resilient financial setup that we could tell people about?
If I could make one comment, it would be that we have to assign probabilities to what's going to happen here in the future. We cannot have cash under our mattress. Inflation is burning. I think of it like a fire. You have a pile of money and the inflation just burning that money from below. We have to be invested. If we stuff it under the mattress, we are guaranteed to lose.
We're seeing rising energy costs with inflation sticking around, and then a lot of people feel like they're falling behind, and I would say I'm probably guilty of feeling like that at times too. And historically, when oil spikes like this, people point back to the 1970s, and I was wondering, when you look at what's happening today, how similar is this to the 1970s, and then maybe how is it different?
Yeah, so there's many similarities, but with any sort of cycle, we're always going to get elements that are a little bit different. It's different than the 1970s. Technology is different. The way the economy moves is different. But there was one very important point, and that was what we saw initially when we had 2020 and inflation was spiking. They increased interest rates, and they said, we have to make sure that we get this right so that inflation doesn't resurge back to levels and we cannot control it.
Okay.
So that's called runaway inflation.
Runaway.
And they said, we got to leave interest rates at this level.
Okay.
And what happened was, you had President Trump saying this and others saying it, you got to cut interest rates more. They are too high. And Jerome Powell and other members of the Fed basically said, we have to go based on the data we have. We do not want a repeat of the 1970s.
Yeah.
And so you would kind of hear that theme coming up repeatedly. And now, because of the war in Iran, you're starting to say, well, the inflation is ticking up. And when you measure this inflation, yeah, sure, you can look at gasoline. That's the big one.
Yeah.
But it's not just gasoline. Yeah. It isn't just diesel. I mean, basically across the board, things are going up in price and people are feeling that.
Yeah, well, I noticed when I went to the grocery store, I was noticing it, there. And I do think a lot of us think when oil goes up, we immediately go to gas, but it is kind of interesting how it affects a lot of other things too.
When we have products that we have, maybe it's corn or wheat, that these things were probably harvested last year, maybe the year before. And then think of the time it takes to process that and then put it onto a shelf and then for you to buy it and then for you to eventually put it in your pantry and then eat it. that inflation, the funny thing about it is we see the prices immediately at the store,
Yes.
even though that was something that came into the economy a long time ago. So what we need to understand is inflation is sticky.
Okay.
And when it gets into the system, it's hard to get out of the system.
Okay.
And that is a big problem for everybody, because
yeah.
how do we shake this out?
Mm-hmm. Yeah. And when so historically when oil moves from say into that $110 to $150 range, the economy starts to break. And I was wondering, are we trending towards that environment again?
Well, it all depends on what happens over the next few days and few weeks.
Okay.
But certainly anywhere above $80 a barrel, they've said that this has become, that sort of level of tension, and the economy starts to slow down. When we get into the $90, $100 a barrel, it is absolutely having an impact. And then, moving up into $150 a barrel, that's recession. Like it cannot withstand that level. Mm-hmm. And, if it's there for a day or two or whatever, nobody would feel it, but it doesn't work like that. Usually it persists
for
and
a longer
stays elevated
period of time. Yeah. Yeah. I was going to say, when I noticed like gas prices are much higher where I'm at, and it's been like that for a couple weeks. It's not like it went from 250 to 370 overnight. So it's been up for a while.
And if the prices of oil go down, gas prices usually take their sweet time to roll back.
Yeah.
So I'm sure somebody's profiting off of that.
Yeah. And we're seeing AI blow up, and it's everywhere. And I'm reading and seeing people saying AI is absolutely going to start impacting more jobs, all jobs. Does this make this particular cycle more difficult for people than it did in the past, now that we factor in AI?
It is. And the reason is that the cycle's moving much faster than we've ever seen before. Okay. So even when it was like back in the day of introducing computers into the workplace, a lot of companies were hesitant. They were saying, why do I need a computer? I have the secretary right here. She does all the data entry herself. So what's happening now with the job situation is that the cycle is moving so fast that a lot of companies are going to say, why do we need to then hire somebody new if this new technology is coming on? If we have AI, if we have robotics and automation, do we really need to be hiring? So a recession happens, we lose jobs, the economy starts to grow, we hire back. But what if this cycle happens and we lose jobs, and then AI and automation actually replace those jobs? So you will have the labor force participation rate as one metric to look at, and that may never grow again. So the population could grow, but you have this labor force participation rate which doesn't grow.
Yeah.
And that's a worrisome thing.
Yeah, that's scary. That's scary. A lot of people feel like, no matter what they do, they're really not able to keep up right now. And I was kind of wondering if your thoughts on overall, why does it feel like people are working just as hard, but falling behind even more financially?
Well, that's inflation. In fact, the new Fed chair who's going to get to replace Powell, I was listening to him on Bloomberg today, and he mentioned it. He was very clear about it. Inflation hits the average person, and it does so when they printed money. When they print money, and he referenced the financial crisis, and he referenced 2020, and said the Federal Reserve made a big mistake by doing that. Okay. They printed way too much. It caused this inflation that we are seeing now. But because it happens in like this delayed fashion, the average person doesn't see that. They're like, I don't know, I'm just going to blame the president. I'm going to blame the government. I'm going to blame, whoever it is. But they don't realize it's the central bank that's doing it.
Okay. It feels like, how do I want to say this? It kind of feels like the middle class almost is getting wiped out, like it no longer exists here in America, or probably across the world. Is there something accelerating this erosion that most people don't realize or think about?
It's the central banks. It's their actions. Yeah, every time they print money, they devalue. And the way I think about this is, So they say no, by the way, in general, the
Well, I was going to
average,
say,
yeah.
I can't, I would be lying if I said, oh yeah, yep, that central bank. Like I'm thinking like our president, our this, our that, like I'm going to all these other places. That's probably not where my mind first would go.
Well, think about this. If we take it to the extreme example, if they printed $1 quadrillion and they gave 1 quadrillion to every single person, what would happen? So then we do that thought experiment. Every store knows you got $1 quadrillion in your pocket, and they're just going to increase the prices.
I was going to say they're about to hike the price up because they know you can pay for it.
That's right. And the same thing happens with, your landscaper and your, all the different professions out there. They say, hey, people got more money, I'm going to increase my fees. And it doesn't happen to such extremes, but over time, these things start creeping and crawling up. Mm-hmm. And, you start to realize that, oh, this, 10 years ago, I wasn't paying a fraction of what I'm paying right now, but it happens. And that's because of this dilution of the money.
Mm-hmm. And I know that, there is a lot of focus on inflation, but, like we're saying with income, it doesn't feel stable either. And so how does income actually change during periods like this, even if people don't notice it right away? Because I don't know that most of us notice it like right away.
Yes. Well, the average income, if you look at the statistics, they have increased.
Okay.
And if you ask 10 people, I'm sure they may disagree with the statistics in this case. Yeah. So you do get potentially a raise each year, what have you, but there isn't. So during COVID era and sort of around there was a lot of job switching that was happening, and it was benefiting people because they would literally go from one position to another. They were making 60,000. Now they're making 80,000. Yeah. And that isn't happening as much anymore. And in fact, a lot of companies have done hiring freezes. Mm-hmm. And during these hiring freezes, people know what's up, and they kind of say, okay, I think they might fire people. They have what's called attrition, and essentially they're waiting for people to just slowly quit, or they say, we're going to offer you something, you can retire early. Okay. You can go, and that's happening a lot of different places. They're making that happen right now across the board.
My follow-up to that was going to be, what's the first warning sign that someone's financial position is starting to weaken? And you just kind of like transitioned us into that. So that was really great, because when you said, they're like, they'll offer you this so they can seal, retire, or let you go.
That they're trying to thin out their balance sheet. And one of the most expensive things for any company is the people. And so if they can get rid of some people, they're always willing to. In fact, the stock market, as sad as it is, they love it when a company fires people. The stocks will usually go up. And why? Because that means their expenditures have gone down. And they say they're good. And as long as they say that, okay, we're not getting rid of everybody because the business is going to go bankrupt tomorrow. It's kind of like, we're doing this and we have a plan, and they have to, have this whole message. But for the average person, you need to pay attention to what's happening at your company, but also in your sector. Is it, going to be wiped out in the near future? We have to be honest with ourselves.
Yeah. So I would say, well, like you said, they really need to pay attention. And would you say that that's maybe lack of attention is why people are missing the warning signs? That's something we can kind of let our audience know, like, hey, we've got to really be like, keep an eye on this.
Oh, for sure. I believe that a lot of people, they're busy with their lives. They have their 9-to-5 jobs, they have their families. Yeah. And for most people, they're just trying to get by, and they can't, they can't make the connections of the Federal Reserve and everything. It's too much. Yeah. And so what we need to pay attention to as individuals is, number one, trying to do our best to, get into the best positions possible. How do we do that? Usually by upskilling.
Okay.
So we can upskill in many different ways.
I was going to ask, I'm like, what do you mean by that? Can we go into that?
Yes. There's like with AI and everything, let me back up. The number one thing that your employer wants is productivity. Okay. How much work do you get done? And there are ways that we can be increasing productivity. And originally AI was not allowed in a lot of workplaces, but more of them have embraced it.
Yeah,
so if you
so
can
many
simply
companies
learn
have.
how to utilize it, imagine a lot of people, they work in back offices of financial companies,
Mhm.
and their job is Excel. Well, now we can integrate AI into Excel, and we can
Yeah.
now drastically improve the speed and the accuracy
Mhm.
of which we do things. So if your company would allow it, you can embrace it. You could be a pro, you could be an expert. And guess what? You're the guy or the girl that's going to be the one in your department that does this thing, and they're going to give you all of the new cool tasks.
Yeah.
And your job is now more protected. So this is just one example, but we have to do this because companies, their boardrooms, the conference calls, we can see all the data from Bank of America, and they show all of the conference calls that are happening, all the earnings calls. They keep
Yeah.
talking about productivity.
Activity.
And what that means is keeping people or letting them go.
Okay. Yeah, I definitely have noticed when I'm speaking with my friends who all, they work in different sectors, but their jobs are implementing AI. Some of those companies have developed like their own version of Chat GPT or
Yes.
and stuff into the company. And so there doesn't seem like they're going to slow down with it either. So I do agree. For some of those people, it's almost like you have to, at the job, it's kind of like you just have to get with it or you're going to get lost essentially. So
100%. I mean, imagine the people who never embraced computers.
mhm.
I mean, eventually, how many other tasks can we get this person to do if they can't use a computer because they're doing everything on the computer?
Yeah.
So it's the same situation, but the pace of it is like many, many times faster. And so we just have to get on board with it. And, we don't have to be a programming wizard or something, but we have to learn how to integrate our roles, our tasks into it and say, look, I can actually be 5 times faster now because of this. I'll get 5 times more work done. It's not like I'm going to be done the day at 11 a.m.
Yeah.
It's going to say, I'm going to be taking on more responsibility, and they're going to say,
Mhm.
excellent.
Yeah. Most people, structure their finances in a way that it's working for me right now, so I'm good with it until it doesn't. A lot of people rely on one stream of income and they don't have much protection. What would be a more resilient financial setup that we could tell people about? Like, what would that actually look like?
Well, in a perfect world, we would have more than one income stream.
Okay.
And of course, easier said than done.
Yeah.
But a lot of people, for instance, they may be handy and they could do side jobs on the weekend.
Mhm.
Maybe they're work for an accounting at a corporate office.
Mhm.
They could be doing other personal taxes around tax time.
Yeah.
If they have graphic skills, they can be doing things, on nights and weekends. And, so the idea is, no, it's not your primary income, but it's a side income. And that is the money that you could use to invest or you could use to, put aside.
Yeah.
There's the ability to basically job switching, as I said, is not as common, but a lot of
Mhm.
people just get comfortable in where they are in their roles.
Yeah.
And by simply taking a step and trying, you can actually increase your income substantially because a company, we get comfortable. I know the feeling, and literally just by changing companies, becoming uncomfortable, we can actually increase our salary. So that's another thing. And then, sorry, you're.
No, I was just going to say a lot of times in that uncomfortability is where we grow the most. And it's hard. Sometimes you need to, my husband always says, you need to suck at something for a little bit. Like you need to go do something and like figure it out, kind of like push your way through it, like learn a new skill, learn a new something. He's like, it sucks when you start sometimes, but he's like, normally once you kind of get over that hump, it gets better. Like you've acquired a new skill, you've made connected with a new network or something of that nature. So
100%. I always say become comfortable with the uncomfortable.
Mhm.
And that goes for anything. Whenever we did the things that we're good at today, the first time we weren't good, but we took time and we learned it and we eventually improved upon it. People have to be doing this. Okay. And when it comes to investing, we want to take what we have and we want to invest. Now that's a very difficult and complex topic, of course.
yeah.
But in an inflationary environment. So if I could make one comment, it would be that we have to assign probabilities to what's going to happen here in the future. We're always doing that in our lives, whether we realize it or not. Is this a more deflationary environment or an inflationary environment, at least from this vantage point? And we could say, it looks like inflation. Okay, knowing that, it might change tomorrow or next week or next year, but knowing this, how do we approach the situation? And that is, we cannot have, our cash under our mattress. This is a big mistake, because inflation is burning. I think of it like a fire. You have a pile of money, and the inflation just burning that money from below. And so we have to be invested. What to invest in and things, that's a complex topic, but just the fact that if we stuff it under the mattress, we are guaranteed to lose.
I was going to say, is that the first, what you would say, maybe simple action that a person could do to build protection? You would say investing, or would you say get the second stream of income first and then invest?
Well, we need the extra money to invest. So if we have the extra money, then certainly, then you could begin right away. And that's I'm not talking about, putting everything on the line, but certainly we don't want to be left behind. We at the very least need to keep up with this inflation level that seems to be getting worse, but we have to do our best. And it's something that just taking a step is, going to move us in the right direction. Okay.
So if you've got the extra income, I think then what you're saying is your next course of action would be to look to areas you can invest in. And then maybe if you don't, it would be, let's see what we can do to make some extra money on the side and then go from there. Okay.
Yes. And a lot of people don't realize it, but if you're doing a little side job here and there a couple times a month, over the course of a year, over the course of a few years, that is the difference between somebody struggling and not.
Yeah.
So there's many opportunities.
Not all income, behaves the same, especially in the environment like we're in now. What's the difference between income that's capped versus income that can actually grow with the environment?
We have to have scalability. And that's an important thing that a lot of people don't really think about too often. It's the scalability. Now, something that we cannot scale is our time. We're bound by time. I mean, you could reduce the amount of hours you sleep. I know some people that work 2 jobs full time and you burn out, right? What we need to have is scalability. Okay. And for the average person, we're bound by time. And so we can only do so much within those hours. Okay. Scalability implies that we could, for example, if we're an electrician, we can scale by hiring more electricians. Okay. We can scale by employing other people. If it's a business that is, for example, I have an Amazon business. I sell on Amazon and Shopify and Walmart. Mm-hmm. And we can scale that because it's on the Amazon system in which I sell my products. Okay. And so that scales virtually infinitely. And this is something that applies to many different industries. And so we should always think about that. How can we achieve scalability?
Is it realistic for someone to shift into something more flexible or scalable, or is that actually harder than it sounds?
Anybody can do it. Absolutely. And they should look for new opportunities. New technologies are coming up every single day. Mm-hmm. And we should absolutely be looking at these things because the world is changing. It's changing fast, and we need to really take hold of it.
Yeah. If we look back at the 70s, what would you say separated the people who stayed ahead financially from those who weren't able to?
They stayed employed, number one, because there was a recession that came up. They did not overexpose themselves to one individual asset class. Okay. They were diversified, and that they were invested to some degree because inflation didn't destroy them.
Okay.
So I think those would be the three things that we can all do. We can all do our best on that.
We're seeing rising costs globally, especially, in production and raw materials. We're talking about that earlier. At the same time, there's this constant flow of headlines around oil, conflict, and supply. It's sometimes hard for me to tell what actually matters versus what's just noise. When costs rise globally, how does that eventually translate into pressure on the individuals?
Well, the first thing we have is the PPI, which is the producer price index. That'll be raw material. So the metal and all of these different input costs. Actually, there's a lot of things in that, but eventually that gets made into products that you and I buy.
Okay.
And it takes time for it to move through that cycle, but the prices respond almost instantaneously. So if there is a crop that goes bad in Brazil for coffee, the prices of coffee, the commodity, go up like crazy, and yet that coffee won't come into the market until next year, for example. And we're going to pay the price tomorrow when we go to the grocery store.
Yeah.
So understand that there's a lot of moving parts globally, and we have to pay the price for all of it, even if it wasn't our fault, even anything. So regardless, we're always going to take the hit.
Yeah. We see more oil move up one day and then it's down the next day, depending on Iran talks. What's actually driving that volatility underneath there?
Speculation.
Okay.
It's all speculation. Commodities in particular are extremely speculative markets.
Okay.
And yes, there's truth to it and everything, but there's a lot of insider trading. There's a lot of speculation. And commodities are this one place that they can easily manipulate. So it's always the case. So, we're going to pay the price for it at the gas pump, but know that there's a lot of stuff going on. And you see this even more so in things like cocoa and coffee and everything else, that the prices go absolutely berserk.
Yeah. Does that kind of back and forth, does it signal stability, or is it actually a sign that things are way more fragile than what we realize?
Yeah, it's very fragile.
Okay.
It is always a moment's notice before something breaks. And we never really are able to adapt to it as individuals unless we have some sort of what I call a firewall. Okay. And that's sort of we want preparation and diversification and so on, things that everyone's probably heard of before, but usually I heard that before. But, we have to actually take action on it. And there's a few things that we can do. But the idea here is inflation is up and it's not going to just go down no matter, what policies are changing and everything. This is a permanent thing. And we know that the Federal Reserve has said many times, we want to create inflation. They say this. They just don't want inflation to get out of control, but they actually want to create inflation. Why? Because it erodes the debt.
Yeah,
So
I was just
debt
getting ready to
means
say,
what?
why do we really ultimately want inflation? But you said it's to erode the debt.
And they have a master plan for all of us to share in.
Yeah.
That is, they can help us out with getting down the debt by increasing inflation. So, that's what they say.
Yeah. There is also talk that higher oil prices could unlock new supply, like South America adding over 2 million barrels a day. How meaningful is that in reality?
Well, the United States, they say that they're energy independent and really don't need the imports of any other country. However, obviously, with what we saw with Venezuela, I would probably beg to differ. There's different reasons for that, though. But there's something to be said about something as powerful as the resource of oil. Countries fight wars over it. So we know that we need it. And the more of it that we have, the more stability there could be. And potentially the price could be lower, which would mean lower inflation and so on. However, OPEC decides what the price of oil is going to be on any day. And so, we just know that there is a lot of oil there. We want it. It can come up from Canada. Canada has to decide on, whether they're going to send that more of it to the United States, whether they're going to do a pipeline. They have many pipelines proposed and so on, but it's not just having the resources there, because with Venezuela, for example, there's a lot there, but not enough is actually getting pumped out and brought into the global economy.
Okay. Kind of wanted to pivot. I was thinking about, it's interesting when we're all kind of going through the same thing, but not everyone ends up in the same position during times like this. And I wanted to get your thoughts on, why do people facing the same environment end up in completely different financial outcomes?
Some of that is financial education, and some of that is people who have, I believe, taken massive risk on something that they heard. I know somebody that invested in Bre-X. If you remember this, they made a movie about it with Matthew McConaughey called Gold.
I don't remember.
If you watch the movie it's called Gold, Matthew McConaughey.
Okay.
And it's about this company called Bre-X. And they didn't have any gold, let's just say. So a whole bunch of people got burned. Mm-hmm. And I know somebody who is just a regular guy, and he put like maybe $40,000 at that time many years ago. And of course, that was worthless after. And so these type of things do happen, whether it's some sort of new cryptocurrency that comes up, whether it's this stock or that stock, they buy it at the peak. That's financial education.
Okay.
For the average person, we could employ what's called, Ray Dalio calls it the all-weather portfolio.
I don't know what that is.
Yeah, it's a very simple strategy that's supposedly well diversified, and I think the percentages of each thing could be debated, but essentially having a bit of everything. That's like the long story short. You can search all-weather portfolio, but it's having a bit of everything. And why? Because Warren Buffett said, rule number one is never lose money. Mm-hmm. So it's more than making money. We never want to be losing money.
Okay.
And of course, we have to try to stay employed. That's the big thing, because then any savings we do have evaporates rapidly.
Yeah.
But we want to have different assets there, because everything sort of shines. You had Bitcoin going crazy for a little while, and then gold was going crazy for a while, and then stocks, and this fluctuates. But if we have kind of a little bit of everything, we're over the course of decades, we're climbing.
Yeah. So for the people watching this, and they're trying to make sense of everything that is happening, what should people prioritize right now if they want to stay financially stable?
Yes. So I would say, number one, be the best in your department wherever you're working.
Okay.
Make sure that they know that you're the best.
Mm-hmm.
Okay. And there's a lot to that, but this is really key, because you need to be employed and you need to make the maximum salary you can with the skills that you have. That's key.
Okay.
You can upskill. A lot of companies will pay for your education to get to the next level, whatever that is. You say, hey, boss, I'm looking at doing this course. Many cases they will pay, or you pay and they'll reimburse you. A lot of companies do that.
So the people taking advantage and maybe taking the initiative to ask their company or their boss what's available to them, because I don't know if it's always made just like clear, plain as day to people that, hey, you actually have access to these resources that our company offers.
Of course, because you're busy doing, your task. But I promise you, in many cases, these companies have this opportunity, and you could just bring it up to them too. You go to a week-long thing and you get your new paper, or it's something you do on the evenings and weekends, and that will net you a higher salary in the end, or you become more employable. Okay.
Yeah.
So I believe that there's going to be less employment going forward. If that's the case, we want to be the one person in that position that doesn't lose their job. So that's number one. And then when it comes to investing, I said about cash, inflation is there, So we don't want to hold cash. Of course, we want some. We have bills to pay and everything. But we simply want to hold on to different types of assets. One of those is fixed income. So you have any sort of money market fund or something that pays you a few percent. Right now you can get 4%, 5%. You can get that on your money. At the very least, you're keeping up with the level of inflation there. And you could have a little bit of precious metals, and you could have some paper assets like stocks. And having that diversification is absolutely going to buffer you from a potential downturn.
Okay. Is it more important to protect downside or position for opportunity?
Well, it's hard to do both at the same time, but I would say Warren Buffett's rule number 1, never lose money.
Okay.
And then he says, rule number 2 is follow rule number 1.
Okay. All right.
Yeah. So, he did pretty well.
Yeah.
He did pretty well.
After everything you've seen in these cycles, what concerns you the most about where all this is heading?
The real concern is that we have runaway inflation because there is no way to contain that without extremely high interest rates. And even in the case of other countries we've seen historically, even with higher interest rates, it doesn't work because once the genie's out of the bottle, it's gone.
Yeah.
And so we have to watch what the Federal Reserve does. The new guys coming in, and it's only one person, but the idea here is that they want to contain the balance sheet more. So they want to print less money. But what happens during they all say this, we want to do this, we want to do that. They get into power and then, they seem to forget. So we'll see, but we have to watch the number one, the balance sheet, which they're printing money, by the way. They're printing money at the same level that they were during the financial crisis. Just to be clear, that's how much money the Federal Reserve is printing right now.
Okay. So definitely we got to keep an eye on that.
Yes. And then interest rates. That's the other one. And those two make a difference on everything. Borrowing costs, when we talk about mortgages and car loans and everything else. So those are the things that we should be the two biggest things.
Yeah. Well, I appreciate this. This has been great. I loved speaking with you. I feel like I learned so much from you. And I wanted to thank you for your time. But before you go, I want to make sure that we let people know where to find you at and how to keep up with you.
Yes. I'm on YouTube at The Money GPS. You can get me there. I'm producing videos all the time. And I hope to see you there.
Okay. Thank you so much for your time. I appreciate it.
Thank you.
Have a great day.